Hey traders, what's happening? Jamie Saettele here. It is September 15th, and it's been a while since we did the Power Hour, but we're back for the time being until further notice. We will be doing these on Wednesdays at this time during this hour. Now that school's back in session, doing them on earlier in the morning is not a possibility because I am taking my son to school at that time. All right, so let's start with US dollar as we usually do. So we've been following this fork here, and specifically the parallel within this fork for some time, right? This was the big level. This magenta line is the one I'm referring to specifically, that we were looking for a big move through, right? And if we got that, then focus would have been shifted towards about, say, 12,130 to 12,160. You can see here that's just a very well-defined horizontal zone. Well, we did break through it in mid to late August, but lo and behold, that break failed. And if we look and zoom in on, say, the last couple of weeks, I will even go into a shorter term chart here. You can see just the importance of that parallel yet again, right? So we came up to it on the 8th. That would have been a week ago today. We came up on it, I guess, on Monday, and we're pressing up against it again today. So this parallel is very much in play still. I don't have a prediction as to what's going to happen here. It's kind of a wait and see approach here. I mean, if we break through it, great. Then again, focus would shift back towards that 12,130.60 level. But it really is kind of just a wait and see. It's a waiting game here. I mean, if we continue to come off, then support probably is not going to be back until this line that connects the Feb and May lows, and that's going to be around the May 3rd, May 4th high near 11,800, which, oh, by the way, is also going to be the 200-day average, right? So, don't have a crystal ball here, but I'm waiting for either a break above this or just continued, range trading essentially below this parallel. So if we look at the various crosses or individual currencies within this, this index, US dollar, euro is one of them, of course. And could we get maybe a clue as to which way we're going to break? So if I look at it from this vantage point, I'm thinking that eventually we do end up breaking down in euro, which would be higher in US dollar, okay? And here's why. So if I show this hourly chart here, we can see 5 waves down, right? 1, 2, 3, 4, 5. That's from the high from September 3rd. So far, we've retraced back towards, this is the high from yesterday, in fact, and we did retrace back towards the area of the former 4th wave, right? We still could get kind of a complex correction on a very short-term basis, if you will. I was thinking that we'd get, maybe 1850, 60 resistance. So we're kind of splitting hairs here, considering that the high was 1846, but the ranges have been awfully tight here. So hopefully we get some sort of resolution soon, although I guess we have FOMC next week, a week from today. So we might be in a holding pattern, unfortunately, until then. But yeah, the big level for euro is probably 1850.60 on the upside, and on the downside, your big level is quite simply, I think it's 1750. If you just look across the chart, you can see that's the July 21st low. And if you were to come back below that level, right, then you'd kind of be breaking what would appear to be an inverse head and shoulders base, right? So the only thing I'm really paying much attention to with euro is 1850.60. I'm kind of looking to sell into that if we get up into that level, say from here, from now until say next week with FOMC. So I'd like to see this corrective pattern kind of, mature a little bit. If this is 3 waves up and we're in some sort of a complex correction, then you probably get something like this, right? ABC, ABC, right? So you get a 3 up, 3 down, 3 up. So something like that, right, is what we might be looking at. When we look at euro, I always do like to look at dollar SEK, dollar Swedish krona as well. So this, to me, this is a great bullish setup for dollar SEK. First and foremost, you've got the year-to-date pitchfork, right? Jan low, March high, June low. That's here. So you can see here just how precise and perfect this has been as far as resistance, right? Resistance here in June, not quite in July, and perfect resistance here in August, okay? So we were looking for this lower parallel to provide support, and we did not quite get there on September 3rd. However, check this out. If I go to an hourly chart, and again, if you're familiar at all with Elliott, this is a beautiful 5-wave rally. 1, 2, 3, 4, 5. Pullback, pretty deep pullback. So we're looking, you've got the combination of Elliott and, pitchfork support, if you will, or parallel support. And we are, along with horizontal support for that matter, taking out, you can see the late July low here, and then just taking that out and then ripping to the upside. So we are looking higher here in dollar SEK, which again would make sense with lower euro against that September 3rd high, along with the higher dollar. So at minimum, risk is well defined with that September 3rd low here in dollar SEK. So this is kind of my, my go-to when it comes to when things aren't especially clear. You hate to force an opinion on the market, right? And with euro, I feel like I'm doing that. But when I take a look at dollar SEK and I've got a well-defined bullish setup, it does make sense to be bearish or hold, more of a bearish view on euro as opposed to a constructive view on euro. All right, let's go to British pound. So we had a great signal yesterday. Now, from a pattern perspective, I don't know what the hell is going on with cable. We had a very well-defined fork, but that is really no longer, right? We had this going on. Hold on here. Okay. So we had this going on, right? We had that center line, perfect bounce, perfect resistance, but now we've gone through it and we're kind of in the middle of nowhere. However, we had a big reversal yesterday to the downside, right? And if you're familiar at all with some of the work that I do when it comes to volume using futures, it helps me get signals for spot as well. And I'm going to bring that up. So we had here, all right. So you can see these red and blue bars, right, painted on here. So that occurs when you have a high volume 1-day reversal, okay? At least, in this case, the parameters are at least a 20-day higher low, 1.5 times, at least 1.5 times average 20-day volume. and we're trading at basically a month high here. So look at all these signals, right? The one prior is actually the high, year-to-date high in June. Yep, year-to-date high in June. One prior to that was actually the low back here in May of 2020. Prior to that was the high for 2019. I mean, you get the idea. These are some pretty good signals, right? You can see short, short, short. This would have been a false signal. Does every signal work? No. This would have been pretty good. Caught the 2017 low. So you get the idea, right? Pretty good signal there for British pound futures on the short side. And if I kind of add a little more color into this, you can see here I've got what I call here. These are volume. Sorry, I can't speak today. Volume weighted average price lines, or VWAP, and these are anchored from various levels. Okay, so you've got this one anchored to the March 2020 low. Okay, this one anchored to the low from September of last year, or 2020, which obviously is an important pivot. You can see how that was support in July and support again in August. The thick line, whenever you see a thick VWAP line on my chart, that means it's the year-to-date line, right? Completely objective, just year-to-date volume-weighted average price. You can think of it in terms of kind of a bull-bear dividing line, if you will. And you can see that we've turned down from that. And then the volume-weighted average price line here is anchored from the high in June. So that's going to be in line with that 2021 VWAP. So we've got VWAP resistance. We've got that volume reversal yesterday. Okay. We also have, I'll bring up something else here. Seasonal tendencies actually are now bearish, right? So seasonal tendencies are bearish for the most part through, let's call it Thanksgiving or so. Really through, the third week of October, and then on a longer term basis, this is 30-year seasonality up here through mid to late November. So you've got a lot of information at hand here to suggest that short cable is not a terrible idea. What I'll do too is let's go to a very, very short-term chart. So here's a 10-minute chart, okay? So we're going Elliott here. 1, 2, 3, 4, 5. 5 waves down. This is live now. A, B, C, right? So as I speak here, we may be putting the finishing touches on a corrective rally. So 2 legs up would be 38.63 and 618 would be 38.67. So if we get a little more strength, you might have an opportunity to short 38.60s in cable with a relatively tight stop, and a lot of good information behind you. All right, so rather than going on to the other dollar crosses right now, I do want to stick with this British pound theme, just because it's one of the better setups or potential setups I've seen in a while. This is pound yen now. And of course, yesterday, pound yen, we also had that huge reversal. In fact, we made I think like a 23-day high and maybe an 8 or 9-day low. I was just kind of screwing around last night, and I was thinking, like, when's the last time we had anything like that, right? In terms of hold on. When's the last time we had anything like that in terms of a 20-something day high and I think I just did 20-day high and 5-day low. Let's see if I can find this. That's not it. Hold on. Hold on. I'll just type it in. So something like this. Bear with me. High. We'll go high equals highest. 20 and low equals lowest. Low 5. Okay. All right. And it was pound yen. So I thought this was interesting. Again, here's that yesterday. So the magenta bar in this case is a 20-day high and a 5-day low, all the same day, right? Here, nothing much. Here, nothing much. You had one here. That was right before Brexit. You had one here. That was the high in 2015. Had one here before we took off to the upside. My point being is that you've got these tend to act like pretty good pivots. Even here, this one would have been a good point of reference. And I love that term, point of reference in trading. That's really all you're looking for, right? Point of reference from which to establish a position, from which to take risk. So treat yesterday's bar as something of a, a possible level to trade a breakout from, right? And it could be either direction. I'm not saying that it has to be up or it has to be down. Now, the way I look at this chart, though, I will tell you that there's a lot here to at least favor the downside. So you've got this is this long-term, former resistance channel line. And you can see that half the channel width, okay, so take the distance here to here and add it. That was essentially resistance, okay? So that's interesting. You've got the rally from March 2020 is a wedge, right? Contracting. All the levels hit perfectly. So your trigger here for this wedge is about 150.50, where that blue line is. All right, if you break below there, you would have, that would be the earliest sign that this is actually a big head and shoulders top. And oh, by the way, the head and shoulders top objective, if confirmed, would be about 141. And that is, oh, by the way, very close to the top side of this huge trend line, right? Former resistance. So let's go back to our very short-term stuff here. Go hourly, 200-hour average. So look for resistance over the next couple of days. I'd say back near 150, 190 or so, right? That's former support here, 200-hour average, which was recently support. And this, of course, occurred as we came from trendline resistance here. So very interesting scenario or possibility in pound yen. This is euro pound. When I have all these, these signals kind of lining up in British pound, right? We had the reversal, the seasonality, the VWAP, all that stuff. The only thing missing, of course, is a good price pattern, which is probably the most important thing, but can't have it all. So I'm looking at all these, at these, pound dollar, pound yen. I want to get a sense of, one of the other major pound crosses is euro pound, of course, right? Does it make any sense? Would it make any sense to see this rally from here? And I say that it would. One, you've got a possible double bottom with the April and August lows. Very well-defined horizontal level, right? Going back to March of 2019. You can see all the key levels within this range really going back, 5-6 years. Key resistance, right? Key support, kind of the midline here has been a key pivot at times. So yeah, just, you could see this definitely, getting a good move to the upside. You've also got good divergence with RSI. So again, does it make sense if pound dollar or if euro pound were to turn up here, which would be a weakening pound? I would say that it does. All right, so that is my biggest thing for today is cable. Let's take a look at dollar yen. Big level here. Really simple, right? Line off of the April and August lows. Tag this August 16th low, which, did we do that today? What's today's low? Yes, we did, to the tick. So, when it comes to dollar yen, the range has been dreadfully small of late. But we are testing a big spot here. So if we were to break down at some point, I would be looking for naturally probably the 200-day average to come into play at some point. But the setup would be for a break. And then if you get it, come back and test resistance or test the underside of this line, which would become possible resistance. Okay. So keep an eye here on dollar yen. Although if I'm trading a yen cross right here, it's probably going to be pound yen. Aussie dollar. Had a huge move off of that 71 figure, which to me was kind of in the middle of nowhere. I was looking for, you just look across this chart. You've got the 38.2 retrace from that March 2020 low. You've got the low here from November. That was election day actually back here, November 2020. You've got huge resistance there from January 2020 as well. All these pivots. Basically, you had a call it 70 to 70, 50, just a huge zone, and we reversed from above that. So I'm not super comfortable calling, this low down here significant. I just, it's when you have a low or a high in the middle of nowhere, it just doesn't make sense to me. However, I will say to pay attention to 72 70s to 72.90. I'll zoom in a bit here. You can see that would be 2 legs down. Okay, right here at 72.77. Also, you would have, this is just the channel, the former channel line. So draw a line here from the February high and the May high, connect it to that April low, and you can see some of the pivots that it does cross. So again, not really involved too much with Aussie right now, but I will note that 72.70s to 72.90 is a key level. Now, Kiwi, on the other hand, I can make a pretty strong argument for there being a big low in place. Okay, for one, you've got this neckline. Connect that December 2019 high and these highs back here from September of last year. And that's, again, a neckline of sorts. And guess what? You nailed that level. You've also got, you could make the case that the drop from this February high is a wedge, right? You can see here, contracting wedge, took out the low as wedges tend to do, and then rocketed higher. So in terms of looking actually in near term, looking to the downside here, but this is the channel, okay, that was drawn. And you can see this line here, which was previously resistance, right? We want to look for that to provide support now, and that's going to be down near 70.30 or so, maybe just below. And again, the 50-day average is creeping up on that level. So 50-day average, for whatever reason, has, over the last year or so, has been pretty solid in terms of identifying pivots in Kiwi. So here you go with, you can see the support, turned resistance. Let's watch it for support now. So again, that's 70.30. Dollar CAD. Kind of a big mess, right? Over the last 2 months, since July 16th. So basically exactly 2 months. You've had some pretty big swings here. My best guess is that this is some sort of a triangle that's going to resolve with a big spike to the upside at some point, but that could be a ways off. Again, if I were to count this triangle, this is an Elliott triangle, right? So you'd have A, B, C, D, and you could still have a little more upside in this D wave. In fact, why don't I label it out for you? So it would look like this: A, B, C, D, E, something like that, right? And one major reason to think that this is a triangle is that you've got all these legs, all these waves, right, are corrective. So like you don't have any impulsive behavior here. Obviously 3 waves down, right? This is a 3, 1, 2, 3. This is a 3, 1, 2, 3. This is obviously a 3, 1, 2, 3. I think we probably get a little, move up here into say 128 or so before we pull back again. One thing that you tend to get in triangles are alternating legs at 61.8%. And if that were to happen here, guess what? We'd be at 28.19, which is exactly where we were looking anyway. So that makes a lot of sense. So with that being said, your next opportunity here in dollar CAD is probably higher, although I'm not sure if that's higher from now or if that's, you need to take this level out here. This has been a really good pivot though, 25.90. Just look to the left and look across the chart, right? You can see all the pivots. Take a look at the 618. So I would think that we probably try to spike to the upside, from the current level. But as far as an actual entry, can't help you there. I was hoping that we'd get, more of a quick, with today's inflation data out of Canada, I was hoping we'd get more of a quick spike in reversal to the upside, but we did not get that. Kiplamo says, hey, Jamie, I am trading the 15-minute chart. Which moving average period can I use? Well, I'm not sure I can answer that question. I actually don't look at 15-minute charts. I will look at 10-minute charts sometimes, but as a general rule of thumb, I tend to keep just a 200 period average on my chart. This is a 4-hour chart. One of my favorite moving averages is a 200 period average on the 4-hour chart. I don't know why, but it does tend to work, and that's good enough for me. In fact, this current example here with dollar CAD, if we were to come down and test it, we'd be at a pretty good level, right? So this is a great example there. So Kiplamo, I'm not sure what moving average you should use. I would start with price patterns and maybe zoom out a little bit, maybe check hourly charts, 4-hour charts, okay? All righty, so bottom line, triangle and dollar CAD is what we're thinking, right? Okay, let's move on wanted to look at, we did look at that pound yen chart. Very interesting. Let's take a look at some metals. All right, so daily chart and silver. So we still have a very bearish fork in play for silver. And I've been looking for a little more of a rebound from yesterday's low, or sorry, from Monday's low. Because if you look at it this way, right, you make the case that you've got an impulsive decline. So if you were to get a 618 of this drop, that would put you back near 24.30, and this is spot silver, okay? So if you were to get back to 24.30, not just 618, but it's also an extremely well-defined horizontal level, and a confluence of sorts with parallels, that would give you an opportunity to short some silver, okay? Again, but continue to focus on these parallels. At the same time, I would be looking for support back near this line here, which is the 25 line. You can see all the pivots on that, right? Here, 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 here. So these are pretty big, wide levels here, but when it comes to trading gold and silver, that's in the metals, I kind of like to pick out bigger spots. In this case, 24.30, a level I'd be returning to the bear side. And if we ever do get down to this 25 line, that's where I'd be looking for support. Okay, in terms of gold, you can also see here we've got a very nice impulse, 1, 2, 3, 4, 5 down. We might be done with a flat correction, which is A, B, C. I was looking for the 618, which obviously is 1814. High so far is 1809 or so. But yeah, I would hold a bearish view on gold at this point. That does not mean I'm short right now, but to me, the path remains lower for gold here, okay? Okay, let's take a look at the S&P. Actually, before we do that, why don't we look real quick at Bitcoin? Because I see that Bitcoin is starting to get a bit of a bounce as I do this webinar. So it's also a good time to address here at Scandinavian Capital Markets, we have actually launched cryptos. So we've got 15 instruments that you can trade directly on MT4, all right? They will be coming to C Trader soon, but for now it is on MT4, so check that out. But with Bitcoin, you see this trend line, this red line, which again from March 2020, right, that March 2020 low. Every time we've banged up against this, which I guess really started in early August, we've come off. And the last time we came off on September 7th, that was with the El Salvador rollout deal. We really tanked. So I don't know. I don't have an exceptionally strong view here. When you have reversals like that, and we have not followed through on the downside, it makes me wary of getting bearish. For one, I don't think you really want to get bearish after something falls, what was that drop? 20% drop, right? usually better to get bearish at resistance rather than bearish after a 20% drop. However, I would not call this chart like the healthiest looking thing in the world, considering that this former trend line support continues to provide resistance. So I'd call myself just kind of an observer when it comes to trading crypto, and specifically Bitcoin at this point. I still see the potential for, an eventual test of 20,000. I mean, that's the old high from December 2017. And, this stuff, Bitcoin, it happens in a hurry, right? I mean, you can wake up one day and there's some crazy announcement and it's down 20%. I mean, or more. I mean, I don't know. So, I do find it fascinating in a fascinating study in human psychology, if you will. And it is purely technical in terms of its levels. I mean, the support resistance on this and the pattern recognition is fantastic. But I don't have a very strong opinion on trading it right here. Christian says, good work, bro. Well, thank you, bro. I appreciate it. All right, so let's wrap it up by looking at the S&P. Okay, hold on. Let's see what pound yen is. This is one actually I'm tracking very closely here, pound yen, because I was short pound yen, got out some yesterday. I would love to return to the short side back near 150, 190. All right. S&P 500. This is so some of the equity charts that we've been looking at in the updates over the last couple of months at both Scandinavian capital markets as well as SB Trade Desk, where I also provide trade ideas with entry, exit, and all that good stuff. We've been looking at this channel. So this is NASDAQ futures, and you can see that the channel line was hit here back in early September, and we have pulled back, I don't know what, 2% or something. So not much to write home about here. But hey, we have put in some sort of a top at a technical level. Now, I don't have, much to say here until we break this little trend line. So go back to May. The level that I would suggest watching, however, over the next couple of days, this is an S&P cash chart. And what we're looking at here is a channel from May, okay? You can see that we topped on that upper parallel, right? If I go into like a intraday chart, this is a 4-hour chart. I would argue that say 44.80, give or take, is a pretty important spot, right? You can say 44.83 to, let's say, 44.87, right? So, we have come off a little bit, but I'm looking for resistance back here. So that to me is like the test on this, buy the dip mentality, whatever, is 44. Let's call it 44.82 to 44.95 or something, right? That level. It's very clean in terms of, right, big high up here. A lot of trading around here. And obviously, you had support here. You had resistance here. It's just a very clean level, and it also happens to intersect with the channel center line as well. Now, that hasn't really done much, but I don't know. It's comforting to know it's there, I guess. So that's where my head's at on S&Ps. Okay. And that is it. That's all I've got today. So again, we will be doing these webinars on Wednesdays until further notice at this time. And yeah, the big takeaway for me today is that British pound setup, right? You've got a very clean, clear, risk point in British pound, which is the high from yesterday at 39.13. Several different ways to trade it. Again, you could look for resistance back near, what we say, about 38.60s. I call it between now and 38.60s, or wait for a break of this level here, right? Let's call it a break of like 37.80 or so. Very well-defined spot. In fact, just throw that up there. So that's where I am focusing my attention for the rest of this week. And that's it. So have a great rest of your week. And again, this is Jamie Saettele signing off. Take care.